Hi, this is Ian Coleman from Signal Centre, and this is this week's video analysis for the FX majors and the dollar index going into the week 23rd of September 2019. Charts look messy. Dollar index is pretty mixed and volatile, and it looks like this is probably going to continue into this week. So we'll break down the different time frames, highlighting what chart formations we're seeing, what bespoke support and resistance levels we have, basically trying to decipher what's going to happen in the days ahead. So starting off with the dollar index, and we're going to go to this chart first. This is the daily chart. So again, mixed volatile trading. You can see just last week's price action. We had 4 days, not quite inside days, but not far off. That's making obviously intraday trading very difficult. We have got an evening star formation that was posted on the 4th of September. That often indicates the top of a trend and the start of a new downward bias, but we've had little in the way of any follow-through selling up to now. This whole formation, and this has basically been made over the last 106 days, looks like an ending wedge pattern that has an eventual bias to break to the downside. If we put an RSI indicator on this chart, we'd see that we're moving very close to the 50% or the 50 line, which basically highlights that we're non-trending at the moment. If we go to a shorter time frame, we're trying to obviously decipher what's going on. Here we can see this mixed volatile trading. The scope for a further corrective move to the upside. So basically, we're looking at this being the first wave to the downside, and then a possible AB equals CD corrective formation higher. The 78.6% fib level is located at 99.05, and we've got an AB equals CD formation target just below there. So scope for buying in the dollar, but when we look at the big picture, we've got that wedge formation, we've got that evening star formation. So really, over the long term, we still want to be selling into dollar gains for the week ahead. So breaking that down into other time frames or other currency pairs, let's just look at the big picture here. So euro dollar, pretty mixed volatile trading. Again, we're looking at this ending wedge pattern that has an eventual bias to break to the upside. We posted a bullish outside candle on the week of 9th of September. That candle often indicates the end of a downward trend and the start of a new upward bias. But last week we saw quite a decent correction to the downside. We posted an inside Arami candle that highlights indecision. If we go to the shorter time frame, like I said, we're just trying to decipher what's going on in the major currency pairs. This impulsive move to the upside looks like a double bottom formation. We broke the previous swing high, so that would normally indicate that we should get a sustained rally higher. That's not happened. We've seen this corrective move lower. Looks now to be in a corrective channel formation. We've got trendline support at 109.61. We'd like to buy dips down around that level, obviously selling into that dollar strength, so buying into euro dollar dips. This week we've got bespoke resistance located at 111.30. Cable, sterling dollar, and this has seen quite a decent rally to the upside. We broke out of this wedge formation higher. I'm wondering whether or not we will actually get quite a deep correction in sterling dollar. We posted an outside bar on the 8-hour chart from Friday's highs. Now that bar often indicates the end of an upward trend and the start of a new downward bias. The medium-term focus is still bullish. We're looking for an eventual rally up to this level here, which is 127.84, and that is the wedge target. But we've got trendline or reverse trendline support located all the way down at 121.11, and we've got bespoke support located at 121.40. So although the long to medium term bias remains bullish, I think we could see quite a sustained correction lower in cable next week. So we're really going to have to sort of have a look at intraday price action. Long-term bias, like I said, will to buy dips, but potentially about 350 points lower than where we are at the moment. Dollar Swiss, and again, this is a pretty mixed picture. We broke this wedge formation to the downside. We had one of those bearish outside candles posted from the high, and then we've seen again some pretty mixed and volatile trading. Rallies were sold into last week, but not at any specified technical level really. If we look at this level here, which is the 61.8% fib level, it's near that psychological one big figure. I think it would attract some selling. If we look over here, we can see obviously that level has attracted sellers in the past. So really on a long-term basis, and thinking about that dollar index again, we prefer to sell into rallies in dollar Swiss. If we go to this time frame, this is the 8-hour chart. Again, we've got that ending wedge formation. Now, we broke the pattern to the downside on Friday morning quite early, but they couldn't sustain those losses. And although we did see rallies also being sold into, I do wonder whether or not we will get a more corrective move higher next week. And that would be the preferred trade, is to sell dollar Swiss rallies around about that one big figure level. Dollar yen, this is quite interesting, I think, going into next week. We saw a move lower from the 50% fib level. That's located at 108.42. But late trading on Friday, we stalled at our bespoke support level. So we've got bespoke support at 107.55. So really want to concentrate on price action early next week to see what this major currency pair is going to do. The preferred trade, and this is a long-term trade, not intraday, is to sell into rallies. We've got bespoke resistance located at 109.35. We've got a 61.8% fib retracement level located at 109.36, and that will be our preferred area to get short of dollar yen. Again, just to reiterate, I think this week is going to be really quite tricky with regards to intraday price action. And looking at that dollar index, remember we're just moving sideways at the moment. Dollar CAD is it a head and shoulders pattern? So spikes or rallies continue to get sold into pretty close to 133 the figure. So this potentially is a left shoulder, head, right shoulder from that selling pressure late on Friday. Really need to see a break of support here, which is around about 132.30 to see a measured move target in dollar CAD around about 131.60. Aussie dollar, again, the 50% fib was quite attractive to sellers. We had a reverse trend line support. We did see a reaction higher from there on Friday, but it was unable to sustain a rally. We've now broken back inside this triangle formation. Next week, the medium-term bias is mixed in Aussie dollar. Next week or early next week, we've got some resistance at 68.12. So flipping the bias basically on Aussie dollar, we prefer to be selling into rallies than to buying into dips at the moment. Euro sterling. Now, this is still probably my preferred cross currency, if you like, to play next week. Pretty volatile, obviously, with Brexit news, etc. But the risk reward ratio for buying dips, I believe, in euro sterling is still pretty favorable. We've got an ending wedge pattern. We posted an outside bar on the 8-hour chart. We came down and then we retested this previous trend line support. Now we've got some bespoke support at 88.47, and although we have breached that level, this is a monthly support level. So as long as we close above there at the end of this week, then our medium-term bias is to the upside for euro sterling. A break of this wedge formation, you can remember we've got a pretty solid congestion zone around about 88 the figure. The measured move target is up here at 91.48. So although they're pretty high risk setups, the risk reward ratio for buying dips in euro sterling. I still think it's pretty favorable. Euro yen, and again, pretty mixed volatile trading. Let's just move this chart in a little bit. We're in this channel formation. We've got a 38.2% fib at 118.42. Is it going to hold? If it doesn't hold, then prime support is down here, 117.68. And in turn, we would look for that to form a reverse head and shoulders pattern. So this being the left shoulder, this being the head, and then this move lower being the right shoulder. So again, mixed signals at the moment. Let's concentrate on that dollar yen pair to see whether or not we're going to get some buying in the dollar and selling in the yen, and we've got another trend line support here. So using correlation, those two are sort of marrying up together at the moment going into next week. So preferably buying into dips at lower levels, but we'll look to see what price action does early on Monday. Okay, thanks guys. I hope you enjoyed the analysis, and we'll be back again soon with some more. Many thanks.